I will predict right now that we will see some reporting and coverage of rent declines, and they will start saying, I can't believe how much the apartment market is crashing. But I think that that's just normal seasonality. And we will see lower month-over-month growth. We have been moderating during a time of typical higher growth, but seasonality was helping us in the summer, whereas now I think that actually the moderation itself is weaker. And you can see that on this graph too, the way that things are sinking down, but the normal seasonality is what's going to affect us, not in any way I think a larger decline, even if we're just looking at the pattern of rent growth over the past year.
Most projections, Matt, were around 3%, like almost across the board for rent growth this year. Seasonally, we know if this year, which we I think as we'll see, it's starting to feel a little bit more normal, maybe a little more subdued, but things start to slow down around this year. It's not uncommon to see some negative rent growth in maybe November and December. It's just a slow time of year, and you're happy to get a lease and fill up a unit. I don't see us getting to 3%. So we've been looking at year over year, month over month. What difference do the month over month numbers provide us versus that year over year? I mean, the base effects of looking at year over year numbers are pretty, can be pretty stark right now. So I'd imagine there's a difference.
Exactly. Like you can't see the smaller trends. Like if something is trending up over the past 3 or 4 months and going, oh, it's stronger, stronger, and stronger. If last year was huge high rent growth anyways, that's just not going to be reflected in there. It washes, the data washes out. So, but if you look at it over month to month, and you can see, it may say there are times when year over year rent growth is decreasing, much like right now, where year over year rent growth is decreasing, but month over month rent growth is increasing. Now, This data only goes to June, and if we included July data, I think that we would finally see a probably stable or decreasing month over month.
But and I think we've got some slightly even more higher frequency or more recent data that we can get to here in a second.
But you can see from at the same time that a lot of these mainstream publications were saying, oh my gosh, rent growth is going down so hard. Ever since the beginning of this year. Actually, month over month rent growth has been trending upwards. So that's just it is important to look at, okay, what's short term, and if you're going to predict the future, which is what you'll be able to do it by the end of this webinar. You want to look at month over month and every year.
So, and this is just another example. Or Matt, you've been making this point repeatedly on the Great Report recently, but trying to kind of be aware of where we are in like the larger cycle of things. And you've pointed to the fact that we're currently in the wake of, a big wave that was all the rent growth that took place post-pandemic in 2021, halfway through 2022. This long-standing, this chart goes back to 1975. And so, I mean, there's nothing even that's close to represent what happened in the market 2 years ago. If you look on this other chart, that this is from just 2013, it also includes a 5-year forecast, five-year forecast going forward. But the big point here is this, I mean, massive impact of rent growth on this big spike that we would expect, and we were talking about this last week, we would expect some declines, and it's actually surprising that we're still seeing some growth on top of this monumental growth that happened a year and a half ago. You would think that there'd be some more retraction, there'd be more correction, just given the math, like the simple fact that typically things revert to the mean.
If you were just looking at the technicals, if you're doing like a technical analysis of the rent growth trend line, you'd think that things are going to revert to the mean.
What goes up must come down. And while the growth has come down, the actual nominal rate really hasn't gone down. So I mean, these bars are the growth on this chart, but then the line itself is the rent, and so it kind of dipped down. It dipped down and it's popped back up. But you see, I mean, that dip, the spike up and then the kind of the flat and to the right, that's the seasonal pattern before it lifts back up from the spring and the summer. And CoStar, at least according to this chart, and their base case, is predicting, who knows what's going to happen in the next couple of years. But without knowing anything,
And
Special, they're predicting continued rent growth.
which is startling. Again, if you were just to think like, okay, this is what I keep repeating is we are in the wake of the largest change in rent growth in recorded history.
Yeah.
Whether it's crashing down or going up, which in this case it went up.
We had basically a decade's worth of growth within a year. Sometimes I think about it in the terms of like time being compressed or like dilated.
Yeah.
And now it feels like things have slowed down. But but we're still growing. We still are. I mean, less than 2% isn't great growth, but you would think that in this economy, and there's a lot of surprises in today's economy, but you think there would be a little bit of a correction, especially with all the supply that's coming online.
The fact that we aren't correcting even more, considering we just had this, unprecedented rise. The fact that we're not corrected more, I think, is a sign of continued strength of housing demand, and it's not necessarily hurtling towards what we're seeing is typical seasonal effects. There is much more of a foundation, and this is another thing too. If we're talking about forward looking, a lot of the reporting, none of the reports are worried about housing demand, about apartment demand, even as they report.
There has been plenty to worry about from a standpoint of interest rates are moving up.
Well,
there's economic uncertainty, but then we've been all surprised. Just exactly your point. There's been a shock of how resilient the housing market has been, whether it's for sale or for rent. Especially, there's been a ton of supply coming on, single family and multifamily. A crazy amount of supply. Interest rates are just through the roof.
Yeah.
And while we still have some issues that the market's going to have to deal with in the next couple months, which we can talk about a little bit later on low maturities report, but from the fundamentals of supply and demand, taking kind of the financing out of it for the time being, surprisingly strong. And you could say the same thing about the U.S. economy and the U.S. consumer right now, which I think all of which is very much related. Matt, here's this chart. It's a little bit higher frequency, daily asking rent per square foot. Now, this is like up to I took it this morning from CoStar. You can see that, we had that, trip down from, the end of 22, really to bottom out in December, which, again, that's classic seasonality. It just the seasonal trends can be, amplified if there's other factors going on. But still bottomed out and then did a nice climb, really got out of 20, really kind of got out of there, there was still weakness in this period. We did see vacancy increase during the same period, but rents have been moving. But a little bit sooner than we typically see, we've started to see the decline come back. Yeah. From the peak, which looked like, rent growth has peaked in 2023, took place sometime early July.
Yeah, that is really interesting because a lot of the information from the rent growth report, you're starting to see that plateau in July, and if you look at it a little bit more granularly, there is, especially with the supply side, there is still some room and some softness in the apartment market, and that's a little bit of a worrying sign. But I think that the fact that it's coinciding with typical seasonality, it's more. Yeah,
I think it's going to be a weak year. It's going to be like a somewhat normal week on average year, but in context of, again, the previous couple of years. Yeah. To come out with any sort of positive growth is a big win. And obviously it's different regionally, and we're just talking national numbers, which are only so useful in an individual decision, but it can be indicative of general trends.
So perhaps then, and you can correct me if I'm wrong, but I remember, typical seasonality, you don't see a whole lot of rent growth in the winter months of January, February. Maybe you see a little bit in March, but really it's like April on, until it peaks around July, August. And then what we're seeing now when we're looking at the daily asking rent is a continued increase even during the early months as there was this initial correction from the steep declines of 2022. There was initial correction, and then things slowly but surely we were reminded that we're still moderating from a 2-year rent growth that was sky high.
It's not a huge moderation. We've gone from 186 up to 188 per foot, and now we're 187 and and change. So it's relatively small